Hello, Sarah here from smallbusinesssarah.com, and today I'm going to show you how to tie out your profit and loss report from your QuickBooks Online bookkeeping to your Shopify 1099. So if you are selling on Shopify and you received a 1099 from Shopify, 1099K, this video will explain exactly how your bookkeeping records tie out to your 1099. Now, this is assuming that you have completed your bookkeeping in the method that I recommend, the journal entry method. Link in the cards up at the top and in the description for my method for Shopify bookkeeping. I would also like to point out that this tying out is only for the Shopify payments portion. So this is for sellers who are only accepting Shopify payments throughout the year. We've got a couple other small things here, but that's not going to affect us. This video doesn't address if you were accepting other payment methods. Although basically, if you were accepting other payment methods, you would just need to combine all of the 1099s to get the figure to tie to your bookkeeping records. But in this case, we only have Shopify payments, so that's what we're going to tie out. So here is our profit and loss, and here are our Shopify figures that we have for the entire year of bookkeeping. And here is our Shopify 1099 figure. $28,566.44. Now, at first glance, the 1099 does not agree to our profit and loss report. It's close, but it doesn't quite agree. So let me show you the calculation that you need to do so that I can prove to you that they actually do agree, or actually in this case, they're really, really close, and then we're going to make an adjustment. So the thing to know about 1099Ks is that most are before refunds, and they also include any sales tax. In this case, at least, it includes any sales tax that you collected throughout the year. So let's go to the little calculation here. The first thing we're going to do is we're going to take the total Shopify sales number per our profit and loss report. So this number down here at the bottom. This number includes our sales, less discounts, less refunds, plus shipping income. So we're going to start with that figure here. Then we're going to add back our refunds because the 1099 is before refunds. So once again, we're going to pull that figure right from here because throughout the year we've been doing the work of our monthly journal entries, so we have all of this data at our fingertips. Then we're going to add back sales tax that we collected. There are two different places you can find that figure. Sales tax is not reflected on the profit and loss report. So the two places we can go are, we can run our financial summary report. This is under Analytics, Reports, Financial Summary. And this is all of last year. And you can see our sales tax that we've collected is right here. This figure was also entered into our monthly journal entry each and every month. So if you go to your balance sheet report, I'm in Reports, Balance Sheet, all of last year. You could also add up all of your journal entries for the year, just like this. Don't include any payments you made on your sales tax. Just include these amounts where we added sales tax. And these are just from the Shopify journal entries. If you're collecting sales tax from other places, you don't include that. I have double checked and it does agree with this figure here. So we add back our sales tax collected. That gives us this figure. And by the way, on your tax return, I would highlight to your tax preparer the calculation for how your profit and loss report ties out to your 1099 so that they can make an adjustment for the sales tax so that you don't need to pay income tax on the sales tax you collected, but your 1099 that you put into your tax form does have to agree. So you have to make a later adjustment for this. Okay, so anyway, we get our total, and this is what the 1099 says. Let me pull that up again. $28,566.44. So our records are showing $8.44 more than the Shopify 1099. So then the question is, well, why is that? Thankfully, it's a small difference, and honestly, it's nothing to worry about at all. I'm going to show you the adjustment we're going to make in a moment here. But the question, just to answer the question about why. So the first thing to do to answer that question is to go to your payouts. So finances, payouts, and we're going to go to transactions, and then you can export the transactions by date and run a report for the entire year of 2022. But I actually included a month before, so I went back to December of 21 and a month after. So I included January of 23, and then you export all of those sales. I've already done that down here, so let me pull that up. Now in the Shopify help articles, they explain that this is the report that they use to generate the 1099. They use the available on date and the gross amount when they are doing the calculation, and they are only using the type charge, not chargeback, not refund. So that is how they are calculating the amount that they report on the 1099K. It depends on the available on date. It's the gross column right here, and it is only charge items, not chargebacks and refunds. So what you'll notice down here is that on 12/31, we have a transaction date, 12/31. So when we ran our financial summary for December, we would have picked up on this transaction. However, Shopify has available on date as 1/4, and that amount is net amount of $844. So that's why the amount is not showing up on our 1099, but it is showing up in our financial statements. And now we're going to make a small adjustment for that. So all we're going to do to get the timing right between the two reports is we're going to do our Shopify sales. We're going to reduce that, $844. And then we're actually going to do our Shopify holding account as the other side. We're going to date this as of 12/31/2022. So basically what we're doing is we're just tying to the 1099. We're going to reduce our sales, and the other side of our entry is going to be Shopify Bank. But if we left it like this, then when we go to do our January entry, we're never going to pick up this $844 sale because it was already in our December entry, and we've adjusted, and we would just be missing it altogether. So what we're going to do is we're going to actually reverse this entry. So we're going to do save and new, but we're going to reverse it as of 1/1/23. Reversing entries are used in accounting when you need to move a transaction from one accounting period to the other, but you don't want it to permanently stay there. So this is a very normal thing when you're just trying to match your accruals between periods. So this one, just make sure we've got 1/1/23 for our reversing entry. And we're going to save and close. So now let's take a look. Now, if we take our Shopify number, 28,297.46. Let's do it again over here. 28,297.46. Same refunds number, same sales tax collected number. And now you can see that our financial statement amount agrees with the 1099 amount. But because we did the reversing entry, whenever we go to do our January Shopify, we can do that just as we normally would from our financial summary, and we're not going to be afraid of double counting a payment or missing a payment. It just puts it back the way we had it, because the way we had it was just fine. It's just that we need to tie to that 1099. So that's how it works with the Shopify 1099. And as I mentioned, this is just for the Shopify payments portion. If you are collecting through other methods, like a lot of PayPal, a lot of Afterpay, Klarna, what you're basically going to need to do is you're going to need to take your profit and loss figures, but you're going to need to add together all the 1099s. And you basically need all the 1099s in order to tie out. You're not going to be able to tie out otherwise. If this video has been helpful to you, I would really appreciate your like and your subscribe. Please leave any questions below in the comment section.